Based on the historical data and forecast, Bitcoin exhibits a strong upward trend with recent volatility. The price has consistently tested and rebounded from the support level of $106,900, while the resistance level has fluctuated between $109,600 and $111,400. The RSI has been oscillating around 70, indicating overbought conditions at times, but hasn't triggered a significant reversal. The Bollinger Bands show that the price has been moving within the upper band for a period, suggesting continued bullish momentum. Therefore, I recommend a long position strategy focusing on capitalizing on the ongoing uptrend while managing risk effectively. My proposed strategy is a tiered entry with a combined RSI and Bollinger Bands confirmation. Initially, enter a long position at $108,900. Set a stop-loss order at $106,900, just below the established support level, to protect against a potential downside reversal. The first target price is $110,100, aligning with the initial forecast price and a reasonable profit margin. If the price reaches $110,100 and shows signs of continued upward momentum, a second long position can be entered at $110,500, with a stop-loss at $110,100 and a target price of $111,800. This layered approach allows for capturing profits at multiple price points while mitigating risk through strategically placed stop-loss orders. Based on the historical data and forecast, Ethereum shows a fluctuating trend with a recent push towards resistance. The RSI consistently above 70 indicates overbought conditions, suggesting a potential pullback is imminent. The Bollinger Bands are widening, signaling increased volatility and potential for price swings. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. First, initiate a short position at $2,660. Given the overbought RSI and the price nearing the resistance level of $2,650, this entry aims to capitalize on a potential correction. Place a stop-loss order at $2,680 to protect against a false breakout. The initial target price is $2,590, aligning with the forecast for May 27, 2025. If the price action confirms a downtrend, consider adjusting the target to $2,540, the established support level. This combined approach offers a balance between capitalizing on short-term fluctuations and mitigating risk with well-defined stop-loss and target levels. Based on the historical data and forecast, XRP demonstrates a downtrend with recent consolidation. The RSI consistently fluctuates, with values frequently approaching the oversold level of 20. The Bollinger Bands indicate periods of volatility, with the price often testing the upper and lower bands. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. First, I recommend a long position when the RSI falls below 20, indicating an oversold condition. The entry price would be $2.31. A stop-loss order should be placed just below the support level at $2.22, set at $2.20 to mitigate potential losses. The target price is set at $2.38, aiming to capitalize on a potential bounce back towards the resistance level. If the price reaches the upper Bollinger Band, I suggest taking profits at $2.38. This strategy combines the momentum of the RSI with the volatility signals from the Bollinger Bands, aiming for high returns while managing risk effectively. Based on the historical data and forecast, BNB shows a generally upward trend with periods of consolidation. The price has been fluctuating between a support of $666 and a resistance of $684. The RSI has been oscillating around 60, occasionally reaching overbought, above 80, and oversold, below 20, levels. The Bollinger Bands indicate periods of volatility. Considering the recent upward trend and the forecast prices, I propose a long position strategy. We will enter a long position at $674, placing a stop-loss order at $666 to mitigate potential losses. The initial target price will be $686, aligning with the forecast price for June 2, 2025. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI drops below 20, indicating an oversold condition, we will consider entering a long position. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider exiting the position or shorting. Additionally, if the price touches the lower Bollinger Band, it signals a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. The final portfolio will prioritize the long position at $674 with a stop loss at $666 and a target at $686, adjusting based on RSI and Bollinger Band signals for enhanced risk management and potential returns. Based on the historical data and forecast, Solana shows a slight upward trend with price fluctuations between the support of $173 and the resistance of $179. The RSI consistently remains above 50, indicating a bullish momentum, but approaching overbought territory, closing at 76.1 on May 26, 2025. The Bollinger Bands show that the price is near the upper band, suggesting a potential pullback. Given these conditions, I recommend a moderately bullish strategy. We will enter a long position at $177, placing a stop-loss order at $173 to protect against a sudden downturn. Our target price will be $179, anticipating a bounce off the support level and a test of the resistance. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 40, indicating an oversold condition, we will enter a long position at $165, with a stop loss at $161 and a target price of $173. Conversely, if the price touches the lower Bollinger Band, indicating a potential rebound, we will enter a long position at $156, with a stop loss at $151 and a target price of $173. Combining these three strategies, the most efficient portfolio will be to enter a long position at $177, with a stop loss at $173 and a target price of $179. This strategy offers a balance between capitalizing on the current upward trend and mitigating risk with clear stop-loss levels. Based on the historical data and forecast, Dogecoin shows a recent downtrend with periods of consolidation. The RSI consistently fluctuates above 50, indicating a strengthening upward momentum. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback. Considering the support price of $0.215 and the forecast for the next week, I recommend a strategy that capitalizes on potential upward movements while mitigating downside risk. Specifically, I propose a long position entry at $0.228, setting a stop loss at $0.215 to protect against a potential reversal. The target price for this trade would be $0.245, aiming to capture a portion of the anticipated upward momentum. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, oversold, it signals a potential buying opportunity. Conversely, when the RSI exceeds 70, overbought, it suggests a potential selling point. Considering the current RSI of 65.9 and the price near the upper Bollinger Band, a cautious approach is warranted. Therefore, a slightly more conservative strategy would be to enter a long position at $0.23, with a stop loss at $0.22 and a target price of $0.24. This blended strategy combines trend analysis, RSI signals, and Bollinger Band observations to optimize risk-reward and maximize potential returns. Based on the historical data and forecast, Cardano shows a downtrend with fluctuating volatility. The RSI consistently fluctuates around 50 to 68, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering the support price of $0.744 and the forecast prices hovering around $0.745 to $0.764, I recommend a contrarian strategy. We will initiate a long position at $0.749, placing a stop-loss order at $0.744 to mitigate potential losses if the price breaks below the support level. The target price for this trade will be $0.808, aiming to capitalize on potential short-term bounces. To refine the strategy, we'll incorporate RSI signals. If the price dips and the RSI falls below 20, indicating an oversold condition, we'll enter a long position at the prevailing price, setting a stop loss at $0.744 and a target price at $0.808. Conversely, if the RSI reaches 80 or above, suggesting an overbought condition, we will avoid entering a long position. This blended strategy, combining trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while managing risk effectively. The portfolio will prioritize the RSI strategy due to its responsiveness to short-term price fluctuations. Based on the historical data and forecast, TRON exhibits an overall upward trend, consolidating within the support of $0.248 and resistance of $0.275. The RSI consistently fluctuates above 58, nearing the overbought territory of 80, indicating bullish momentum. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a short-term pullback or consolidation. I recommend a long position strategy with an entry price of $0.274. To manage risk, set a stop loss at $0.266, just below the recent low. The initial target price is $0.28, aligning with the forecast and the upper Bollinger Band. To refine this strategy, I'll incorporate an RSI-based adjustment. If the RSI crosses above 80, consider taking partial profits at $0.278 and moving the stop loss to break even. If the price reaches $0.28 and the RSI remains above 70, set a second target price of $0.28. This tiered approach allows us to capitalize on the upward trend while protecting profits and minimizing potential losses. This strategy combines technical indicators and price action to maximize returns while managing risk effectively. Based on the historical data and forecast, SUI has shown a generally downward trend with recent volatility. The RSI consistently fluctuating around the 60 level suggests neither strong overbought nor oversold conditions. However, the forecast indicates a continued downward pressure, with prices potentially reaching $3.58. Considering these factors, I propose a short position strategy. Entry price will be $3.68, with a stop loss set at $3.78 to limit potential losses if the price reverses. The initial target price will be $3.58, aligning with the forecast. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently staying within the band suggests moderate volatility. If the price touches the upper Bollinger Band, around $4.33, it could signal a temporary upward correction, prompting a quick cover of the short position with a target of $3.78. Conversely, if the price approaches the lower band, around $3.15, it could indicate a strong downward momentum, allowing us to adjust the target price to $3.42. This dynamic approach, combining RSI signals with Bollinger Band confirmation, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a downtrend with consistent support at $15.3. The RSI fluctuating between 48.9 and 69.2 indicates periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering the forecast for the next week, with prices ranging from $15.3 to $15.9, I recommend a short position strategy. The entry price should be $15.9, capitalizing on the potential for a slight downward correction. Place a stop-loss order at $16.3 to protect against unexpected upward movements, and set a target price at $15.1 for a reasonable profit margin. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, consider a long position with an entry price of $14.3. Set a stop loss at $14 and a target price at $15.3. Conversely, when the RSI exceeds 75, suggesting an overbought state, initiate a short position with an entry price of $17.7, a stop loss at $18.1, and a target price of $16.7. Combining these three strategies, a portfolio with a weighted average of 40% short, 30% long, and 30% neutral positions is recommended for optimal risk-adjusted returns. Based on the historical data and forecast, Eigenlayer shows a fluctuating trend with a recent bounce from the support level of $1.21. The RSI is currently at 64.1, indicating slightly overbought conditions, but not excessively so. Considering the Bollinger Bands, the price is approaching the upper band, suggesting potential for a pullback. Therefore, I recommend a moderately bullish strategy with a focus on short-term gains. We will enter a long position at $1.45, placing a stop-loss at $1.38 to protect against a sudden downturn. The initial target price will be $1.55, aiming to capitalize on the upward momentum while respecting the upper Bollinger Band resistance. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, we will reevaluate and potentially enter a long position at the prevailing price, with a stop-loss slightly below the support level of $1.21 and a target price of $1.3. Conversely, if the RSI reaches 80, signaling an overbought condition, we will consider exiting the current long position or initiating a short position with a stop-loss above the resistance level of $1.6 and a target price of $1.45. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while managing risk effectively. Based on the historical data and forecast, PancakeSwap shows a fluctuating trend with support at $2.33 and resistance at $2.51. The RSI fluctuates between 50 and 67.5, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show price volatility, with the bands widening and narrowing. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $2.33. The stop-loss will be set just below the support level at $2.28 to mitigate potential losses if the price breaks down. The initial target price will be the resistance level at $2.51, aiming to capture a significant portion of the recent range. To refine the strategy, we will incorporate the RSI and Bollinger Bands. If the RSI falls below 50 and the price touches the support level of $2.33, we will enter a long position. The stop-loss will be set at $2.28, and the first target will be $2.41, aligning with the upper Bollinger Band. If the price reaches $2.41 and the RSI is below 70, we will move the stop-loss to $2.35 and set a second target at $2.51. This layered approach allows for maximizing profit while minimizing risk, capitalizing on both trend and volatility. Based on the historical data and forecast, Optimism shows a downtrend with volatility. The RSI consistently remains below 80, indicating the asset is not overbought. However, it dips below 40 on several occasions, signaling potential oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. The support price is consistently at $0.698, while the resistance is at $0.783. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for high returns. My strategy involves a long position when the RSI falls below 45 and the price touches the lower Bollinger Band. Specifically, enter a long position at $0.73, placing a stop-loss order at $0.698, right at the support level. The initial target price is $0.783, the resistance level. If the price reaches the target, consider moving the stop-loss to break even to protect profits. If the RSI rises above 60 and the price touches the upper Bollinger Band, take partial profits at $0.76 and wait for the next opportunity. This strategy balances risk and reward, capitalizing on potential rebounds while limiting losses with a well-defined stop-loss. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the 60 mark, indicating neither strong overbought nor oversold conditions. However, the price has tested the resistance level of $0.881 multiple times, suggesting potential for a breakout. Considering the forecast prices, which remain above the support level of $0.81 and oscillate around $0.87, a moderately bullish strategy is advisable. we will implement a strategy focused on capitalizing on potential upward movements while mitigating downside risk. Our strategy involves a phased entry approach. Initially, we will enter a long position at $0.848, coinciding with the first forecast price. A stop loss will be set at $0.81, just below the support level, to protect against a potential trend reversal. The first target price will be $0.881, the established resistance level. If this target is reached, we will move the stop loss to break even to secure profits and allow the position to run further. A secondary target price will be $0.9, based on a potential breakout above the resistance. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Injective has shown volatility with a recent upward trend, bouncing off the support price of $12.4. The RSI consistently hovers around 60, indicating a neutral to slightly overbought condition. The Bollinger Bands show that the price has been fluctuating within the bands, but recently touched the upper band. Considering this, I recommend a long position strategy. We will enter a long position at $13.5, placing a stop-loss order at $12.5 to protect against a potential downturn. The initial target price will be $14.5, aiming to capture a significant portion of the recent upward movement. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 40, indicating an oversold condition, we can consider adding to our position at the prevailing price, with a stop-loss adjusted to the entry price of the new position. Conversely, if the price touches the lower Bollinger Band, it's another signal to consider adding to the position. If the price reaches $14.5, we will take partial profits and move the stop-loss to $13.5 to secure gains and protect against a potential reversal. This layered approach combines trend following with volatility-based signals for optimized returns. Based on the historical data and forecast, Raydium shows a fluctuating trend with periods of consolidation. The RSI consistently hovers around the 50 to 70 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. The forecast prices are relatively stable, hovering around $3.35 to $3.40, which implies a potential for a slight upward movement. Considering the current RSI of 61.9 and the forecast, a moderately bullish strategy is warranted. Therefore, I recommend a strategy focused on short-term gains with defined risk management. Entry price should be $3.35. The stop loss should be set at $3.15 to limit potential losses. The initial target price should be $3.40, capitalizing on the anticipated upward movement. If the price reaches $3.40, consider moving the stop loss to the entry price of $3.35 to secure profits and protect against a potential reversal. The support price of $1.65 provides a strong floor, further reinforcing the stop loss level. This approach balances potential gains with risk mitigation, aligning with a high returns investment strategy. Based on the historical data and forecast, Uniswap has shown a downtrend initially, followed by consolidation and a slight upward movement. The support price of $6.39 provides a strong floor, while the resistance at $7.55 caps potential upside. The RSI fluctuates between 47 and 66, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering these factors, a combined strategy leveraging RSI and Bollinger Bands is recommended. Initially, we will implement a buy strategy when the RSI falls below 50 and touches the oversold level of 20. The entry price will be $6.13, with a stop loss set at $6 below the entry price. The initial target price will be $6.41, aiming for a 3.1% gain. Subsequently, we will implement a buy strategy when the price touches the support price of $6.39 and the RSI is below 50. The entry price will be $6.33, with a stop loss set at $6.20 below the entry price. The target price will be $6.80, aiming for a 6.8% gain. Finally, we will implement a buy strategy when the price touches the support price of $6.39 and the RSI is below 50. The entry price will be $6.38, with a stop loss set at $6.20 below the entry price. The target price will be $7, aiming for a 9.4% gain. This portfolio combines the strengths of all three strategies to maximize potential returns while managing risk through carefully placed stop-loss orders. Based on the historical data and forecast, KAITO demonstrates an upward trend with consistent price increases over the past 2 weeks, supported by the forecast data indicating continued growth. The RSI consistently above 60 suggests a bullish momentum, although it has approached overbought levels, indicating a potential for a pullback. The Bollinger Bands show the price fluctuating within a defined range, with the recent price nearing the upper band, further supporting a potential short-term correction. Therefore, I recommend a strategy that combines trend following and mean reversion principles. My proposed strategy involves a long position with an entry price of $2.14. Given the potential for a short-term pullback, I'll place a stop-loss order at $2.08 to protect against unexpected downside movements. The initial target price will be $2.29, aligning with the upper Bollinger Band and anticipating a continuation of the upward trend. If the price reaches the target, we will reevaluate the RSI and Bollinger Bands to determine if a further long position is warranted. If the RSI falls below 40, indicating an oversold condition, consider entering a long position at $1.95 with a stop-loss at $1.88 and a target price of $2.12, capitalizing on the expected bounce. This layered approach allows us to maximize potential gains while minimizing risk. Based on the historical data and forecast, Jupiter demonstrates a generally upward trend, though with periods of volatility. The recent RSI values hover around 60, indicating neither extreme overbought nor oversold conditions. The forecast prices suggest a continued upward trajectory, with values consistently above the recent closing prices. Considering the support at $0.547 and the resistance at $0.668, and incorporating the Bollinger Bands, I recommend a moderately bullish strategy. We will enter a long position when the price touches the lower band of Bollinger Bands, which is $0.441, with a stop-loss set at $0.42 to protect against a potential downside reversal. The target price will be $0.602, near the forecast price for June 2, 2025, Monday. To refine this strategy, we will implement a dynamic position management approach. If the price reaches the target of $0.602, we will take partial profits and move the stop-loss to the entry price of $0.441 to lock in gains. If the price retraces to the $0.547 support level, we will consider adding to our position, effectively lowering our average entry price. This combined approach, utilizing both trend analysis and technical indicators, aims to maximize returns while mitigating risk. The strategy is designed to capitalize on the expected upward movement while incorporating safeguards against unexpected market fluctuations. Based on the historical data and forecast, Quant shows a generally upward trend, with recent fluctuations. The RSI indicates that the asset is nearing overbought conditions, fluctuating around 60 to 70. The Bollinger Bands show that the price has been oscillating within the bands, suggesting potential volatility. Considering these factors, I recommend a long position strategy focusing on short-term gains. We will enter a long position at $100, placing a stop-loss order at $96 to mitigate potential losses if the price declines. The target price will be set at $104, aiming for a reasonable profit within the forecasted upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop-loss at $5 below the entry price and a target price at $104. Conversely, if the price touches the lower Bollinger Band, we will enter a long position at that price, with a stop-loss $2 below the entry price and a target price at $104. This blended approach combines trend analysis, RSI signals, and Bollinger Bands for a dynamic and potentially high-return investment strategy.